Good evening. This is Dr. Jeffrey Scott, and this is my Market MRI Pro update for Wednesday, January 7th, 2026. Well, I'd have to say the chop that we saw today and the modest digestion and pullback from the highs was not a surprise. I showed you that 13-week new high, new low yesterday, and I commented that this is where we typically pull back from. Now, you don't have to pull back hard. These choppy days for a few days will ease off that overboughtness. Question is, where do we go from here? And was any damage done today? Again, Jeffrey Scott, marketmripro@gmail.com. My Google group is Top Down Trader, and my website is Market MRI Pro. As always, I do these videos for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools, or my tools, the top-down analysis, how I use them. Trading involves risk. You'll are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should always be considered risky. You should consult with your financial advisor before making trades. I have tools in multiple platforms, but am an independent trader. My Google group is called Top Down Trader. You just go to Google Groups, you look for all groups, you join Top Down Trader, and you'll get a note every time I post something. You'll get invited to meetings, or I don't invite the modern world. And from time to time, I'll give some special deals on stuff. I'm going to include in the my note tonight a link for an upcoming Metastock meeting next week where I'm going to talk about my add-on. Just do me a favor and please register whether you can go or not. I appreciate the registration. And those that register will not only get a copy of the video sent to you by Metastock, but this weekend I'm going to film a video of how I use the options to swing trade positions from a short-term perspective, short-term being weeks to months, not months to years, not hours. I'm not a minute trader. And that'll be a nice giveaway that I'll give everybody who signs up. So just look for that in the top-down group or in the remark session on the YouTube. My news and earnings dates, you could see Thursday we got some jobless claims. We had ADP employment today. I think came in close. And there was a revision that sort of made the changes irrelevant from predicted. We will see tomorrow, Friday rather, the monthly employment report, and we'll get jobless numbers. I think the market is digesting whether or not we're going to get a rate cut. And one thing that I like to do is I like to just go here and look up at the right keyboard setting, Fed rate cut probability. And what you're going to see, if I go to the right place, is Fed Watch. And what you're going to see is a free tool. And this tool is predicting 88.9% expect no change. And I think that's what we're probably going to see. I think that's important because if the market is predicting no change and we get one, or vice versa, it could be looked at as a surprise. And markets don't like surprises. If you look at earnings, you'll see that today we started to see some earnings, and then more on Thursday, and that this earnings season really begins in earnest next week. As I do this at 7:37, futures are not doing a whole lot, mixed at best or worst. The interesting thing is Trump sunk defense, which is one thing we've been talking about during the day when he was concerned about profits and employee executive compensation, among other things. So Howlett, which is a position we're long since about the 200 level, was down 3.79. And after hours, it's looking at opening between 211 and 215, up anywhere up to 4 points. So why? Because after hours, after Trump's comments took them down. His comment to increase spending like $1.5 trillion on defense, so we could have the ultimate defense, um, reversed them higher. So I expect defense to be up tomorrow. One of the things that I talk a lot about is biotech, and I've been talking about for the last couple of weeks that there's this JP Morgan effect. And would we see it? Well, I've been long LABU for a long time. I've been trimming on the way up. You have to, especially when you have something have a move, as you could see here. And when I say I've been long, just go back and look at prior videos. Well, you see this spike up here? I was doing a presentation for work, my day job, healthcare tech company, and I'm watching my portfolio spike. And then before I could finish the presentation and figure it out, it came back. Still had a nice positive day. And when I went and looked, I think it was because of this AbbVie rumor to buy Revolution Medicine. Revolution Medicine had a massive move. Now, why would that matter to LABU, and what's it got to do with JP Morgan? Excuse me. JP Morgan meets Monday through Friday next week. I'll actually be going in San Francisco. It's where a lot of deals get done and a lot of meetings of pharma, healthcare services, tech, um, bio leaders. And we go to meet with bankers and meet with the companies, and usually it's a busy time. I remember last year, I think we were sitting there and there were like 3 transactions occurred while we were in the meeting. So here we have the run up, Amgen to buy Darkpool Therapeutics, that AbbVie rumor, which really drove Labu today. Lilly made an announcement. J&J acquired. YD Bio merged. And AbbVie bought a small Chinese drug candidate. All of those, I think, are happening in the first week of January, the first 3 days, 4 days, trading days of January, probably because JP Morgan's coming. So I will seriously look at lightening up more as we go into that meeting, sort of buy on the rumor and sell on the news. To order a Market MRI Pro or for more information about anything I talk about, please feel free to reach out to me at marketmripro@gmail.com. I try and answer all my emails. If you have any program difficulties, coding at marketmripro.com. All you existing users, you know how much I appreciate you, but not a but. If you're not on the Windows App Store version, then you need to email me right away because I got to get everybody switched there because we're going to not stop supporting the other version that's out there, but all the new installations and the improvements that we're doing, enhancements, are going to be on the version in the Windows Store. If you really don't want to get to know me and spend the money and buy a program, well, there's no requirement to buy the program to watch my videos. There is a way to download it and use it for free for 3 days. Well, it's not exactly free. I think it charges you $7.95. And why would I charge you? Because if 1,000 people downloaded it, that would be wonderful, but the server cost would kill me. So it's to make it so that not everybody just clicks on everything and downloads it. But $7.95 for a trial for 3 days, and then we move you to not a real version, but we change your activation. Right now, activations that are done at the Windows Store will turn off in 72 hours. But once you're registered, they're on forever as long as you pay your yearly maintenance fee. Got a lot of questions about how much the program costs. This is a full-fledged program with everything from timing models to the segregation of by sectors, industry groups. We're about to release a module on the top-down analysis of the ETFs. And it's not an indicator. It has a lot of indicators. So I've sold indicators in the past for as high as $1,500. The program on January 1st went to $26.95 for year one. And after year one, there'll be an annual maintenance and data fee. And right now it's at $4.95 as long as my server cost and data cost per user stay in the similar range. I had a special that technically expired on Monday, and Praveen, who's a nice guy, said there are a number of people doing the Windows trial, so just leave the tag on until Friday. So the coupon that I can share with anybody that asks has it at $14.95. It will not be $14.95 again. Again, plus starting in year two, that annual fee. See you in Florida in 2026. This is not a selling video. That's it I'm talking about. And I did it because I had some questions today. I'm going to talk about how I look at the market. Now, my wife says, if we do through the market so much, why does anybody need to buy your program? And I had to think about that for a while. And I remind her that it actually works during the day. And there will come times when I don't do this every day. And, you know, I am not a guru. I'm just a regular guy who's been in the markets for a long time with a lot of ideas and experience, and who one of my followers happens to be the world's greatest programmer. Although he's not a programmer, he's more of a engineer leader, but turns out he knows how to code. His name is Praveen, and we're really proud of this. And again, as I said in the beginning, I really appreciate those that have purchased it, come to my live seminars, etc. So let's take a look at the market for Wednesday. And I'm in it 11 minutes. I got 20 minutes. I'm just what it'll take to do a deep top-down analysis and come up with some potential buys. That's what my goal is on a nightly basis. So start the daily briefing. We can see volatility was up. The dollar was up. Two things we don't want to see up. The Qs was the only index trading higher, finishing up 0.1. It was up as high as 0.73 during the day. Russell finished down 0.23, well off the highs and the lows. Spider was down 0.32, Diamonds down 0.94, and Bitcoin was down 1.7. If you look at the last 5 days, most of that part of the Santa Claus rally before it ended, you could see Russell and Bitcoin leading up over 3%. And you could also see that the major indices, especially the spiders and the diamonds, finished at the bottom of the range. So definitely a much more bearish feeling day today, but I think it's just it's like taking a pause, maybe a little digestion before new highs. Speaking of new highs, I like to look at the 52-week or 12-month new highs minus new lows on the NYSE and the NASDAQ, and they both came down, but they're both positive. Here we look at three different sectors and their components. Each of those components is assigned a sector and an industry group. Blue or green was today. Whatever color that is, gray, I guess, was yesterday. And you can see pretty uniformly, we see a lot less in the sectors and industry performance today than yesterday. But more importantly, the number of stocks up 27% in the S&P 1500, 45% in the NASDAQ, and 30% in the NYSE. I did not expect to have a positive day today, but LABU did what LABU does, and it had a monster move. I'm in a couple of really strong stocks now that I'll call out as we take a look at the market. And then one of my biotech plays, which is a pretty big position. It didn't have a massive move. It had an upgrade SRRK and was up 7%. So biotech took care of me today. If we look at the S&P 500 sectors, it's important to remember S&P 500 sectors, not all the stocks in my universe assigned to sectors. But if we look at the S&P 500 sectors, really the only thing positive today was healthcare and technology was flat. You can see leadership to the downside, utilities, industrials, material, finances. Those are from the open, but down here 2.4 on utilities and 1.88 down on industrials, 1.73 down on materials, financials down a lot, real estate and energy. And again, healthcare was the only thing up, and technology, this was one day from the open, one day change down 0.08. So a negative looking day. Thematically, what won? Biotech was the big winner. Woohoo. Cannabis did not have a great day today, or excuse me, was up today, but not a big move. And those that watch me long enough know I don't even pay attention to it. It's a bunch of cheap stocks that are whipsawing around whether or not the government or when the government decriminalizes marijuana. I don't think they're all going to survive. I think that will open up for big industry to come in. So I don't pay much attention to the Tilrays and others. Maybe they'll be winners. And this is the most telling. We've been hearing about this forever. And over the last 2 months, cannabis was down 3.58. 2.14 on cybersecurity, then 1.78 genomics and biotech. Another cybersecurity theme. Software bouncing after getting clobbered the last couple of days, and then you got uranium. So that's it. There's not a lot of positivity. If we look at what's negative, leadership was copper, home construction, China internet, infrastructure, silver, solar. Yeah, I don't know what happened in solar. I haven't had a chance to go look. I just know that my first solar went from in the money to out of the money. And that was a negative on my account today, but it's where it is at the end of the day. And ITA, which has been super strong, actually sold off 1.65, but I'm looking for a bounce there tomorrow. If we go to the timing model, and during the mentoring session on January 31st, which I'll be sending out links to in the Top Down Trader group soon, I'll go into deep detail on what that timing model is. But we just put our eyes at the red and green underneath the charts. You could see daily spiders is in a buy, daily Qs is in a buy, daily Russells in a buy, and daily diamonds are in a buy. And if we look at the weekly, we can see the weekly, all of them are in a buy. So if the weekly's in a buy, the daily's in a buy, and the monthly's in a buy, I'm still going to be predominantly long. However, because of what I showed you yesterday, I had some bit of a pause in my buying, and we'll have to see where the market goes tomorrow. Like I said, not a big signal in the futures. And I'll show you again for those that weren't here, well, what is he talking about? If we look at the major indices, the Qs popped out of their wedge, strong seasonality, predicting price goes higher, but could not hold it, close back in. Now, it has been very predictively bouncing up and down. Does it take a short leg down before the next leg up, or does it break through? I don't know. That's one thing I'm watching. I don't really consider this a false breakout because it didn't close and trade above that line. It's threatening that line, but a pullback here for a few days, not surprising to anybody. And if we extend the 17 or the 21-day EMA, it'll run right into the bottom of this. And that would not be an unusual, perhaps, downside scenario. Upside as we break out and run up to the past highs. If we look at the S&P, the diamonds, what happened to the S&P? Did we talk about the S&P? S&P, I think I skipped. The S&P, what I wanted to show is it did break out, and it held that breakout line. This line here was the prior highs. It was this breakout failure that worried me. Now we'll see what happens. We're still above that line. Again, a one-day negativity down 0.32 is not the end of the world. We may have some more chop to come. We shall see. I'd love to see it bounce off that line. I was about to talk about the Qs. We talked about the diamonds. Just like the spiders, a one-day reversal here. It's not the end of the world. It's still above the 17 and 21-day, the 50 and the 100 and the 200. A ton of support underneath. And we set an all-time intraday high during the day today on the diamonds. I think on the spiders as well. The Russell has actually been the strongest. It's not back up to the prior highs. Broke out of this trend line. Again, a little bit of a give back day today, coming back 0.23. Seasonality says it's still going higher. So I would say digestion day and not a lot of damage. That's how I would interpret what I see in the market here. Volatility, what's it telling us? Volatility is interesting in that it's got a pretty steady rise here, and that maybe we should be concerned. What's interesting is it also is riding up its predictive seasonality numbers. And I think as we get later into January, the back half, it's not unusual to see volatility increase. So that's something to keep an eye on. That looks like it's going higher. And then lastly, the dollar is just consolidating underneath this 200. A substantial break above that would be bullish for the dollar, but don't forget where the dollars come from. The dollar's well off of its highs. All right, so my assessment here is we may have some more digestion. And I think that was a reason to lighten up on the long today. If I look at commodities, so gold and silver have been super strong. Look at strong seasonality and predicted where the price is going. And I thought this was going to be an island reversal. We might come down as far as the 50. We came down to the 17 and we're running again. Gold was off it's today 1%, but still in a very strong looking pattern. Ditto silver. Silver set all-time high yesterday, had a move down today. Now, in my candles, if you're white, you're positive. So you were 6.7 yesterday. Today you are minus 3.73. If you're red, you're negative. If your candle is open, you closed higher than you opened. If your candle is solid, so here's an update, but you closed below where you opened. That's the candle convention I like. I know others, my buddy John Person, prefer what it's done in TradeStation and other platforms. So we'll be adding an additional way of looking at your candles. I think it's to each his own. Silver, less positive seasonality, kind of flat, and what a run it had. But just like gold, it hasn't stopped. Oil, well, I think all this Venezuelan oil supply coming on board is not good for the price of oil, probably good for us consumers. Now, let me take a second and talk about these three lines here. I'm a big believer in seasonality. Seasonality occurs because, well, in energy with refiners, when you change from summer to winter production, you might see a spike. It changes in retail related to the Christmas holiday. It often changes quarter to quarter based upon seasonal variances in demand for different companies. So I like to look at seasonality. One of the uniquenesses of this program, others do it, but certainly it's not a standard in everybody, is I have this line represents the average performance by day for the last 5 years. The green represents the last 10 years, and this represents all time. So it gives me a sense of expectations of what might happen or predictive price. Natural gas, we talked about this being a top, this looking like a bottom. Yeah, it's bouncing, but natural gas is pretty low in the pattern right now. And then 10-year and 30-year came down today. That's good. Down 0.98 on the 10-year. And if you look at it, the bonds kind of look like the dollar well off their highs. And if we look at the 30-year, not as pronounced, but also off their highs. I overly use trend lines, folks. If you don't know that, I like trend lines. It tells me anything. But the 30-year also was down today, which as an equities trader made me happy, down 1%. The Fed controls the short end, but the smartest money in the marketplace, the bond guys, control the long end. So if the long end, if the bond guys are, hold on a second, Praveen just messaged me. If the bond guys are worried that we're not doing a good enough job on inflation, you could see that the 10-year can run on its own in the 30-year, even if the Fed's cutting rates. All right, what do we got next? So now let's go look at some of my breadth tools. Look at the buckets change. This gray bar shows you how many stocks in the NYSE are trading above their Bollinger Band yesterday, 13%. The gray thing here says that yesterday only 5% were below, and the flip-flop. So there was some pretty big movement, and that means from above to below, from the top of the bands to the bottom. So it was a bearish day. It was a bearish day all around, with most stocks down on the day. The next thing I like to look at is my market's breadth tab. And this on the left is the NYSE composite. On the right is the NASDAQ composite. And you can see the NYSE hit all-time highs yesterday. The high was 2258. Actually set all-time highs today, but couldn't hold it and sold off a little bit into the close. Something that bears watching. Now, yesterday we saw Bango there, which is exuberance to the upside. And seeing exuberance at the highs, especially all-time highs, maybe that was a signal that we might be pulling back. We can see the new high, new lows on both are positive, AD lines negative, up-down volumes mixed. This represents the last Hindenburg-Omen signal. It's been a while since we've had that signal. They don't look very bullish to me right here, but that's just one day. We'll to see what we get tomorrow. This represents stocks above the 17-day in green, above the 50 in white, above the 200 in red. And what you look for are extremes. Extreme down at the bottom, the markets go higher. Extreme up on the top, which I don't see here. Maybe we're seeing up here, the markets go lower. 8 o'clock bell. All right, this is my other market timing model. And let's bring it to where we are today, but I want to leave the bars big. So you could see that the spider, the S&P 1500, the NASDAQ composite, and the Russell are all very close to all-time highs. You could also see that they're all, the last three bars are going higher, higher lows, higher highs. Yet you could see the RSI has turned down, the AD line has turned down, and the participation has turned down. What I look at is this thing here, which is the 13-week new high, new low. It has turned down as well. It's dropped to 0.69 on the spiders, 0.74 on the S&P 1500, 0.71 on the NASDAQ, and 0.67 on the Russell. That's actually really good. Why? Because when it was sitting back here, it wasn't long ago that we were looking at a little bit higher. And even though that's not topping, it on the short term, if I was to take this intraday especially, you would have seen that it's starting to get excessive. And now we pulled back. You can see where we pulled back before, and we pulled off that extended amount on the 13-week new highs versus new lows with really minimal nominal damage to the market. I like that. When I look at the sector timing, on the bottom are the defensive ones, and they're all, well, except for healthcare, real estate, utilities, and staples are all weak. Healthcare is breaking out. Here you have industrials, which have been super strong. We'll have to see what happens after this bearish engulfing pattern. Industrials are involved in some of the data center. We have financials, which gave up some today. We have energy, which broke down with the price of energy, but hasn't flipped to a sell. And we've got materials, which, like industrials, have been leading, especially with the data centers. Bitcoin pulling back, but still in a buy. And then some of the other leaders, technology holding up okay. Discretionary, think Amazon had a good day holding up okay. That's too much. And then like communications, maybe I should just go here the easy way and go, give me 50 bars. You can see communications is holding up as well. I like to look at certain stocks every day, so I put them in one grid to make my life easy. I'm looking at them with a timing model, but I still have some moving averages on them. I don't have the dots and everything else, but I'm really just getting a sense of how they're doing. So very quickly, Amazon broke out. We talked about it yesterday. Hopefully it'll continue because it's a part of my portfolio. Apple just continues to weaken. I saw somebody talking about buying it down here because it's cheap. Well, it keeps getting cheaper. Google, I did buy some today. I had my can't help myself. I had a trend line drawn and it broke out above my trend line. It did go to a buy signal, so I did buy some Google today. Meta, weakening. Netflix in a takeout battle, which has destroyed the value of the stock and bringing it down closer and closer to the 70s where it broke out from. Netflix has great seasonality historically in January, but I'm not paying any attention to Netflix seasonality when the stock is in a free fall. Technicals trump seasonality. Tesla, all-time highs. Then its deliveries on Friday sort of surprised people and it began to sell off and it's continuing to sell off. Doesn't look very good. NVIDIA holding doesn't seem to be doing much right now, but it's still technically in an uptrend. Here is Microsoft. Is it making its move? Well, it's had 2 big days in a row, but it couldn't hold it. Maybe put it back on the watch and see. Be nice to buy it at a discount, but it's been very weak. I mean, you compare that to Google. LABU, like I said yesterday, I took some off. Well, timing's everything, but fortunately I left a lot on, and it was a great day today for biotech. I'm not sure how long this continues. It's been really strong, really since the 50s. And I don't mean 1950s. I mean since the $50 range. It's at 170, 175. You know what they say about pigs. Pharma also doing well, especially since most of them have cut deals with the administration, so they have some insight into what their pricing controls by the government are going to look like. And then I think we got 2 left. Data centers traded much higher today, and I saw the Oklos and a lot of the other things that are data center related do well. It pulled back. I'm not sure that anything really changed, but did it get technically overbought some? Probably. And then the one that Trump sort of hurt was ITA with a bearish engulfing pattern there. It's an ugly candle, but I think his statements after the close are going to just reverse that tomorrow, but we will see. So that gives me a sense of what the market's doing. I'm a top-down guy. I think the reason why I had my return last year, and I don't always do 180+% return. Proof of that, just go look at the video I did this weekend. But top-down trading keeps you on the right side, and the right side of the market and in the right sectors. Now, people are wondering when is he going to look at stocks? So the layout here, this is the stock layout. I have 3,783 stocks in my universe today. I'm looking at NYSE, NASDAQ, and Amex stocks have to be above $1 and 100,000 for me to pay attention. I go into the top-down piece and I look at what was the leadership today and healthcare, cyclical, and technology. Well, I could look at just healthcare, and these would be the top 10 in healthcare. 1, 2, 3, 4, 5, 6, 7. And there I got 649 stocks, and then I could put a $5 and 500,000 share. And now I've got 295. I could rank them by U, which is impulses that I look at, volume, gaps, momentum, breakouts, and one of my moving average crossover systems calls the CPR. And I could just start looking at these. IVA, you see up here it's inventive. tells you on what it's developing. A lot of these are going to be no revenue, no earnings companies, and that's pretty much no revenue, no earnings. A nice little breakout here and lots of volume. You can go over here and look at the news and to see moderate buy, third quarter, reports third quarter, that's been a while. You can always get some information by going over to not the hamburger menu, Jeff, but going over to this. Now, the news, you hover, it comes out, take it away, goes away. Same thing with fundamentals. If you want to know what a company does, just hover over the name. The CRNX, I don't like things that do this. Looks like confusion. Was there some news? Public offering of common stock. Well, that's never a good thing. Probably worth reading their story. This is a great candle, but it came all the way back, pull back, so maybe I should be interested here. TBPH, Theravance, this is one that has pulled back to the 50 and is moving. I like that pattern. SNDX, so one way is to play individual stocks, and this is impressive at a negative day in the market. Mankind, but unless you know this business, you have to be very careful. And I've said this a lot before. Look at Lilly breaking out, the kings of the GLP-1 weight loss story. And for my followers who know how much I like the double momentum, look what it told us to buy it. Now, Kathy can attest that I told her to buy it 2 or 3 years ago, 2 years ago maybe. But we had a big buy signal back there as well. Now, here's the problem with trading healthcare. The non-healthcare stock will have 4 quarterly earnings reports. It could have some news during the year, but probably nothing that's going to move price significantly unless there's something, takeover, etc. But a biotech stock, especially one who has only preclinical assets, you're not going to be judging it on price and earnings. On earnings, you're going to be you're judging it on potential. And you've got 4 quarterly earnings reports. You have scientific meetings every weekend somewhere on some disease. You have data releases that are published or presented at these meetings. So almost every day can be a market moving event. So I'd rather just buy an ETF. And even though this is my world of biotech, I'd rather buy that when it's moving up than mess around with a lot of individual stocks. Now, I talked about this guy a while back, and I am in Scholar Rock. And I went into Scholar Rock, which isn't a very good looking chart, to be honest, because when I heard who the new CEO was of the company, I got very interested because I know what he's done before. Is that a reason to buy it? No. It actually had an upgrade today, which didn't hurt me. But I have a few individuals that I'll buy stocks because I believe they have a story. And what everybody wants is to have, it's got revolution. This is the one that Lilly projected a buyout today. Now, probably false news. How many of your regular stocks go up 28% in a day? Imagine if you had 1,000 shares from $50. And today it went from a low of 79 or 80 bucks up to 102 in one day. That's why people love biotech. They also go down in one day. So I'm not trying to be a downer on healthcare stocks. I love healthcare stocks. I like the ETFs, they're safer. IBV is another one that some people will like. XBI. Each of them are a little bit different in components, and you could pick which one you like, and this one's actually basing and breaking out. All right, that's enough biotech talk. Another thing I like to do is not pick a sector. Reason why it says 2000s, I got the filter on, but rank all the industry groups by percentage move, and 1, 2, 3. And I could do the same thing looking at the top 10 industry groups and see if there's anything new. 10. Energy Navigation Limited. Is this a services company? So if I click on here, it tells me Sacos Energy, I believe it is services, pays a 14% dividend. That's hard to believe, but that's what it says. It makes money. It's going to, next earnings, we don't know. It was $1.05 versus 67. I don't know why it doesn't show positive. A big surprise. I don't know anything about this company. I go up here and it tells me it is Seaborne Crude Oil and Petroleum Transport Services Worldwide, LNG. Okay. Maybe with all that 50 million barrels of Venezuelan oil coming here, whatever the number is, we're going to need transport. Here's that IDA again. Actually looks interesting chart. And I could go down this list as well. I'm not going to go through it all because my 30 minutes is now up and we're in the 40-minute range. And I'm getting tired. Another thing we can do with this tool, and a lot of people have given me positive feedback on how it's performed for them, is if I go back to the impulse here, let's kill my filters. I've got 2 scans that have been fantastic. A+ scan. Remember I showed you those 2 blue dots in a row? This requires it. You can see Amgen, which is a big boy in biotech. And Amgen had a big move today. And there's your double dots. And when I see 2 dots, blue dots in a row, here it was back here, it typically tells me that we're going higher. That's why I'm scanning for that. Now this scan requires specific findings on momentum, breakouts, relative strength, but it's my all-in best signal. ARVN is a healthcare stock. ATXS. BioCryst is another biotech. Bristol Myers got a big upgrade today. This is a big company, and so on and so forth. There were quite a few there today. The A without the plus scan looks for stocks that are squeezing, that are starting to have momentum and breaking out. You can tell how big this market is by the number of stocks in here. So we'll look at Google. I said I bought it today. Why? Here's the squeeze. There's a breakout, momentum and breakout. And what I look for is that RS moving over the yellow line, which it is. And I look at the white line over the yellow on volume. It's not extended. It's in an uptrend. So I've got 2 really high value scans that find me great stocks. Do I buy everything in this scan? Absolutely not. I use this scan to find leaders. When I looked at my portfolio today, and I think these are, I don't know if we talked about all of them. My big movers today, Reddit. I am long Reddit from about 205, I think. Yeah, from in this area when it broke out here. So Reddit is gradually moving higher. And oh, by the way, why did I buy it? Because I follow what I preach. 2 dots, I saw that intraday. CRM, which I took pain on when the software stocks dropped and it regained its losses. We'll see if it can go higher. I showed you the Scholar Rock AXTI. I bought this one less than a week ago and before the move, and pretty much, let's see if I can, it was 13, 14 when I bought it. This thing is moving, obviously, had a nice breakout. I'll probably talk about that option trade when I do my video this weekend for the options. What I did on that one is I went long a 17.5 call, and I sold a $15 put to finance part of it, and then I bought a $12.5 put to protect it. And I'll show you the performance when I do the weekend. It's had a nice triple-digit performance. And then the other one was LABU. So all these are stocks that I found with the system. So is this guaranteed to make you money? Absolutely not. Is top down guaranteed to make you money over a long period of time? I do think it will. If you can be as good as some of the people I've learned from, I think top down is the best way to consistently make money over the long term. And the reason is simple. Let me just go back to my timing model. Let's look at the weekly. We have been long this market since May 12th. I put out a webinar on April 7th, and the title for everybody to see, and it sits on YouTube, is A Bottom is In. And I use my tools. This is the weeklies. Let's go. But I use my tools to show why I thought a bottom was in. And if you're a top-down investor, you make your money off the bottom and you get light up at the top. And then you make your money off the bottom and you get light at the top. That's how I like to trade. That's how I like to teach. This went on way too long. I think, I don't think, I came up with concepts. Praveen's a genius programmer, engineer. He takes my words, he puts them to code, and days later we have it in the system. So I hope you like this. I hope you learn something. Hopefully I help you make money, because that's what investing and trading is all about. And we'll see you tomorrow.